Today is Tuesday, January the 19th. Yesterday was a holiday, Martin Luther King Day. Today the market was firing on all cylinders. Janet Yellen made the case very clearly that the government needs to do more in terms of stimulus. And what was unsaid is that there's really two stimulus bills that the market is now expecting. One is coronavirus support called the Rescue Act. And the other one that'll come within a couple of months will be a huge infrastructure spending bill that will be a fight to get through Congress. But the Democrats have the votes. So the market was pretty lifted up about that. Now the oscillator just finished barely above neutral. Look at all the chopping that's taking place. Look at the last time it happened. We broke down the last time this much happened. You could say in here we were chopping quite a bit as well, and we went up, but we did follow that with a lot of period where we were below neutral in the oscillator. So the S&P had an up day now. Friday we filled this gap, so we can take that out. The S&P 500 didn't make a new high today, but it was up 0.81%. Apple had a good day, up $1. This is a doji, an indecision day. I'm still positive, still long. Remember that the earnings are on the 27th next week. The stock is below the 8 EMA and below the 20 simple moving average. Netflix had a big day today. We don't follow Netflix, but it's one of the tech stocks, and I think it's just going to be good for the market tomorrow. Zoom Info Technology, great day. Another narrow ranging trading day, big range rather, but not much difference between the high and the close, which we saw with Apple. So the exuberance in the morning was quickly taken by the profit takers, but the morning's buyings were mutual funds, big institutions do their trading early in the morning, and then the day traders came in and snapped up for a temporary profit. Square down a little bit on the day, still struggling, I'm still long the stock, still like it, but I was able to roll my 240 and 242.5 calls into next week, again for most of the profit. 91 cents left in one, $1.91 left in the other, but that one had been sold for over $6. So, these constantly rolling like that with Square and with NIO is proving to be a very good source of revenue, and I really like it. So NIO today, again, narrow opening and close, but a wide trading range, finished just above the 8 EMA. This gap is now closed. Very happy with this stock as well. Do we have a gap in here? We do. So let's just put it in for the sake of completeness, because it is a gap. And although we had that candle down, we still have not finished this gap, so we should keep an eye on it, particularly tomorrow. It'd be nice to close it because we have some short calls that we could roll. But as long as these stocks stay in a narrow trading range, having covered calls and rolling those covered calls every week is just a tremendous source of income. It's been my strategy for several years now, and it's really one that I like. CVS, not doing very much. Still a stock that you could be nibbling on. JP Morgan, US Bank, both down a little bit. Let's take a look at the new stocks, and let's take a look at FIS, Fidelity National Information Services, that Zach is into. Took a bit of a drop today, but closed right on the 50% Fibonacci's. These Fibonacci's are working, so this should be a place of support. Let's just take a look at the Ichimoku. We're below the cloud. We're below the 8 EMA. The Chiku span is down. So you've got to have confidence in the Fibonacci's here, because the Ichimoku isn't giving you that much support. Let's look at it on a shorter time frame of 1 hour. Not that much better. And on 15 minutes, rejected at the top of the cloud. So it's a bit of a sketchy opportunity right now. Buying, if you're convinced that this is going up and you've got some inside information or just a gut feel, just make sure that you put a tight stop on it, because everything from a cloud base is telling us that the stock is going lower, and it did as well today. Let's take a look at the volume. The volume was not all that high, but we had two big selling days, one day of buying above the moving average, and there was no follow through today. So I would keep a stop on this, and I would certainly put my stop right here at that level right there, $126 roughly. I tend not to put stops at round numbers like 126. If it's 126, I would put my stop at 125.86 to 125.82, trying to keep it round numbers and seeing if there are buyers at 10 cents under that round number and 15 cents under that round number. VERU, still not breaking out. We looked at VS, DDD, still looking great. SONO, taking off again. RKT, really nothing to write home about. Going to probably take that off the watch list pretty soon. If anybody has any ideas of stocks that they like to take a look at, let's add them to the list. We could go back and revisit Home Depot, Caterpillar, but I think that they are getting expensive right now. Whirlpool as well. Walmart is certainly expensive. Kramer saying Amazon is a screaming buy. Well, it's a screaming buy if you want to buy options, but at $3,000 a share, that's pretty steep. I wouldn't be buying the shares. I would be buying call spreads on it, maybe 60 days out, but you know that they just had a great quarter that they'll be reporting next week. Disney, again, another expensive stock starting to pull back. So give the market some time. Still bullish in the long term, but wouldn't it be nice to see a good 5% pullback, maybe to the 50 simple and EMAs both at the same point, and we're coming into contact with the cloud. Wouldn't it be great if we could see the market bounce at the point where these three intersect? That would be a real opportunity for the market. So let's look for a 5% pullback, and then let's start piling into stocks that we think are looking good from a cloud point of view and a Fibonacci point of view.